Good morning, good afternoon, and good evening, ladies and gentlemen, and welcome to Jedi.Tax Online. I'm your host, Rogelio Noriega. Thank you for joining me. It is January 22nd, 2023, and season officially begins tomorrow. Yes, the IRS has given us the go-ahead to pretty much open up the season, and it looks like we're going to have a regular normal season. Actually, no, we're not. Hoping the season would end on April 15th. No, it's not going to happen this year. April 15th, it's because that's on the weekend. It's Saturday. So that means it normally gets moved over to the next business day, which is Monday. Oh, wait a minute. Washington, D.C., our nation's capital, is having Patriots Day on Sunday. Well, it's on Sunday. They're moving it to Monday. That means the IRS is closed on Monday. So April 18th is the new official deadline for this tax season for personal returns and most filings. Oh, wait a minute. If you're in California and if you're in one of the disaster counties, your season has now been extended to May 18th. And we haven't even begun yet. Wow. A lot of stuff to go over, folks. We're just going to get to it right now. So thank you for joining me. Start your engines. We have some stuff to go over. There are some important things and not so important things. I'm set to take my vacation. Well, I was going to take it on the 18th, but I'm going to take it on the 19th. I don't even know if I'm going to take it on the 19th because the season is extended to May 15th. So go figure. For those that are in California, disaster counties, I believe Ventura, LA, San Bernardino, Riverside, and San Diego. I don't know about El Centro or Imperial County, but not all counties in California have been declared a disaster zone. So, hey, go figure. So for those in California, May 15th, if you're in a disaster county, you can go ahead and contact us. We'll let you know. But other than that, some startling changes. There always are changes. But unfortunately, we did lose out on some credits, so you do need to know. Probably one of the more important things is you should expect in the next few days, even though the IRS pulled back on its requirement for the 1099 K forms, as you know, if you receive payment or you issue payment through one of the payment apps, the new figure dropped from some ungodly figure, which I don't remember what it is. I think it was 20,000 or something like that. It now drops to $600. Well, the IRS said, well, hold on. We're not going to force everyone to do it for this year, 2022, which is now. Some companies are still going to do it. So if you get a 1099K, you're going to have to report it. Nothing changes. But as we understand, for the most part, you're probably not going to get a 1099K. So if you have a side hustle, as they call them, small business or whatever, chances are, don't quote me on this, but you will probably not receive a 1099K. Now, someone such as myself, I will be receiving a 1099K because I just am, and due to the agencies and the earnings. So I'm not concerned. I'm expecting one. I've been receiving one for several years now. So, but this is for everyone else. There's going to be a hassle when it comes to the reporting requirements. So if you do receive a 1099K, it's not the end of the world. Do not worry about it. But that is one of the most important things. You may receive one. You may not. So my thoughts go out to you already. And hey, here it is. I'm sharing a cup of Joe with you. I went with, not Sanka. Oh my goodness. Which brand of coffee? It's not my usual Javalia, the official coffee of Jedi.Tax and Sports Talk with the Guys. No, I went with, I don't even remember the name now, but I'm getting old. But anyway, there are lots of changes. Lots of credits have been reduced. A lot of automatic credits. There are no stimulus payments, except if you live in California and you did receive the middle class tax payment. I received a 1099 for it. Mine was $700, and I did receive it, so I'm going to have to report it. So if any in California received a middle class tax cut or rebate, you're going to have to report it on your federal taxes. So hey, you have another extra month to report it, which is due May 15th, if you are in a disaster county. But nevertheless, we're going to go over some of the changes right now. But There's a subtle one that I do want to get out of the way real quick, and it has to do with the filing status name change to qualifying surviving spouse. The filing status qualifying widower is now called qualifying surviving spouse. The rules for the filing status have not changed. The same rules that applied for qualifying widower apply to qualifying surviving spouse. I guess there were some connotations there, and they changed it. So that's one of the classification ones that we must get to. But all right, who must file? Who has to file? Well, I have that information, and I'm going to click on that one right now so you can have that. Who has to file? All right. And of course, I had it right here, right now. And at the moment, I don't have it as I'm looking for it. Unbelievable. But I will have it right now. We'll get to that one. That one is embarrassing. I had that information, but standard deduction amounts are increased. Single or married filing separate have now increased to $12,950. And remember, the standard deduction is for those of you that do not itemize. And itemize generally means you do not take into account your expenses such as DMV fees, charitable contributions, mortgage payments, or the mortgage interest, and points if you purchase a home, medical expenses, state and local taxes, and stuff like that. If you don't have more than your standard deduction, you will just take the standard deduction, which for single or married filing separate is $12,950, and for married filing joint or qualifying surviving spouse, it is now $25,900, and for head of household, it is $19,400. So, hey, it is what it is. The health coverage tax credit is not available for the 2022 tax season. As you know, the credit was not available after 2021, so be it. The credit for child and dependent care expenses, as you know, the changes for such implemented by the American Rescue Plan Act of 2021 were not extended for 2022. The credit for the child and dependent care expenses is non-refundable. The dollar limit on qualifying expenses is $3,000 for one qualifying person and $6,000 for two qualifying persons or more. The maximum credit allowed is 35% of your employment-related expenses. If you have any questions, speak to your tax preparer. You may set up an appointment with us. Look at the link down on the Chiron or the streamer, whatever, Jedi.Tax. And remember, we are not offering any advice. Oh, I forgot about that. Here we go. We are not rendering advice. You can pause it. You can read it. There it is. Accuracy of information. We're going by the most available stuff that we have on hand. No warranty. And look, this is the way it is. I'm providing information for you, and you need to speak to a professional when it comes to making these decisions and on the information that I'm providing to you. So you are not my client. There's no relationship here. I'm just providing you information. Yes, for legal reasons, I have to put that out. That's the Selena rule, of course. But anyway, and no, I'm not using my usual format where I have all the stuff niftily prepared, and just didn't have time to do so. But that's okay. The credit amount for the child tax credit is $2,000 for each qualifying child. The amount of the qualifying tax credit that can be claimed as a refundable credit is limited as it was in 2020. As you know, they increased it. So during COVID, you were able to get more of it back. But now it has been increased to $1,500 each. So long story short is this. You have a $2,000 credit, but if you don't have the taxes, you're only going to see $1,500 total. Now, actually, that's refundable. If you have the taxes, the other $500 will eliminate that. So, thank you. Appreciate that comment in the chat room. I'll have to look into that. Maybe if you want to contact us at Jedi.Tax, that would be great. Thank you. You see it right at the Chiron or the streamer at the bottom. It has increased to $1,500 for each, which is refundable. A child must be under age 17. Remember that was changed, but again, it must be under 17. So in the year so if they turn 17 in 2022, that's it. That credit's gone. You're not able to claim the $2,000 credit. If they turn 17 in 2023, you can still claim them for the 2022 tax year, which is what we're doing right now. So it was increased to 18 during COVID. That's gone. Bona fide residents of Puerto Rico are no longer required to have 3 or more qualifying children to be eligible to claim the that credit. So bona fide residents of Puerto Rico may be eligible to claim the ACTC if they have 1 or more qualifying children. So wow, that's the additional child tax credit, the ACTC. Now, the enhancements, as I mentioned to you, have expired. So the enhanced credit allowed for qualifying children under the age of 6 and children of 18 has expired. That's what I just mentioned. So that's gone. And the advanced child tax payments credits have not been issued for 2022. So there we go. Now, there are changes to the earned income credit. As you know, the age requirement with no children was gone. It's back. Meaning, if you do not have children, you have to have, of course, have earnings, and you have to be between 25 and 65. That's the way it was before COVID, and now it's back to that. So, non-taxable combat pay. In 2021, the amount of non-taxable combat pay was reported on the Form 1040 or the ESR, and it's just switching lines, so that's not important at this point. The standard mileage rate, as you know, was increased. The vehicle is 58.5 cents a mile from January 1st, 2022 to June 30th, 2022. And from July 1st to December 31st, it is 62.5 cents. So if you do volunteer work, it was increased to 14 cents from January 1 through the end of the year. So you're going to have to itemize. Oh, and for medical appointments and stuff like that, it's 18 cents. So, actually, it's 18 cents for the first half of the year and 22 cents. So if you went for x-rays, doctor's appointments, hospital visits, whatever, actually not going to visit someone, but going to have work done in your doctor's office, at a lab, dentist, optometrist, hospital, whatever, the miles to and from are deductible. First half of the year is 18 cents a mile. And for the second half, it is 22 cents a mile. And remember, parking is deductible as well if it's a required medical procedure. So that's just something else I added. The modified AGI limit for traditional IRA contributions. For 2022, if you're covered by a retirement plan at work, your deduction for contributions to a traditional IRA is reduced or phased out if your modified AGI is more than 109,000 but less than 129 for a married filing joint couple or a qualifying surviving spouse, and it has to be more than 68 but less than 78,000 for a single individual or head of household, or less than 10,000 for married filing a separate return. Wow, that's bad. That is crazy. So the adoption credit and the exclusion for employer-provided adoption credits have both increased to $15,950 per eligible child in 2022. The amount begins to phase out if you have modified adjusted gross income in excess of $239,230, and is completely phased out if your modified AGI is $279,230. So, as I mentioned at the very beginning, reporting requirements for the 1099-K is issued by third-party settlement organizations and credit card companies to report payment transactions to you for goods and services. You must report all income returned unless excluded by law, which you receive either income by electronic or not, and whether you received a Form 1099-K or not. So you got to report it. If you don't report it and you get audited, well, so be it. Folks, there's a lot of political stuff going on right now about the announcement there's going to be some 87,000 armed IRS agents. That is 100% false. It is a genuine fabrication. The request and the money that went in through the omnibus, it shows exactly where it's going to be spent, and it's going to be spent over the next 10 years, and it's to replace agents that are leaving, retiring, and these are clerical, administrative, as well as agents. This alleged 87,000 hire is over 10 years, not 87,000 people with guns that are going to be storming down your door. Now, let me also put it to you this way. If you're filing your taxes and you're doing it properly, following the law, what do you care how many agents? Think about that, folks. Seriously, think about that. What do you care if you're filing your returns correctly? So, it is what it is. Now, also, tuition and fees deduction not available. This was a deduction that you had available, and it was taken out after 2020. Instead, the income limitations for the lifetime learning credit have been increased. If you have questions, see Form 8863 or speak to your tax preparer, or you may set up an appointment with us at Jedi.Tax. So, the IRS launched an improved identity verification and sign-in process that enables more people to securely access and use IRS online tools and applications. To provide verification services, the IRS is using ID.me, a trusted technology provider. The process is one more step the IRS is taking to ensure that taxpayer information is provided only to the person who legally has a right to the data. So they've changed it. It's a little bit easier. I recommend you go to irs.gov and you go there and you set up your account. You must go there. You should go there. And this is another way where you're able to control your destiny. So that's what taxes are all about. Under business meals, Section 210 of the Taxpayer Certainty and Disaster Relief Act of 2020 provides for the temporary allowance of a 100% business meal deduction for food or beverages provided by a restaurant and paid or incurred after December 31, 2020 and before January 1st, 2023. So it's gone. And that was another COVID rule. It is now gone. So let me see on a few other items. Okay, let me check my additional notes. The over-the-top charitable contribution, the $300, and for married filing joint, $600, also gone. So if you were thinking of taking some charitable contributions, only if you itemize return. So if you use the Schedule A, what we used to call the long form. I have taken to referring to my preparation as basically a simple return, which doesn't have any major attachments or forms, and then you have the long form. That's how I refer to them as. And you can check my website. Everything is up there as to what we charge and what we prepare for. So you can always do that. Always ask your preparer for a rough idea as to how much it's going to be, so you're not surprised. I charge per form, but I only have like 6 or 7 different prices. So, for example, if you have interest income, which is Schedule B, you own a home, Schedule A, and I'm just generalizing here, it's the same price. I don't charge extra for the A and the B. Now I do charge more if you're self-employed, which is Schedule C, and I do charge extra if you are a rental property owner and you have rental properties. So, and if there's a sale of a property, I do charge extra. But like I say, we don't nickel and dime like other organizations. We do have set prices, but you just need to know what they are, and you can always ask for an estimate. So, but it's on the website from me. And you should inquire from your other, from your preparer, whether it be an agent, an enrolled agent, an EA, whether it be a CPA or a tax preparer. I know in California, they are going after preparers who are not registered. They're called ghost preparers. I don't know why. There should be another more derisive name, but they call them ghost preparers. If a preparer is not licensed in California, for example, the fine is $2,500. So it used to be a lot less. I think it was like $500 or so. I should know that one, but I don't recall. And the IRS, I believe it's a $50 fine. I should know that one, but I don't recall it right away. But the point is, if you pay someone, and look, folks, fact of the matter is this: even if they're not licensed, because the IRS requires you, and believe this or not, folks, there are really only 5 states that have some sort of certification. One of them is California, another is New York, Oregon, and there's, I believe, Connecticut is another, Maryland may be another, I don't recall. But if you are going to have your returns prepared, even if the person is not licensed, they should still sign the return. So there you go. That's all there is to it. Because really, they just don't want to pay taxes. That's what it comes down to. So, okay, it is what it is. All right. Let me see, what else did I have? I mentioned the 300 and 600 for the charitable contribution is gone, only if you itemize. And it's just really disappointing. Let me see. I mentioned the 1099K. Okay, here we go. For the Child Independent Care Credit, which may help offset the care for children, it's been reduced, as I mentioned. In 2021, the credit jumped up to $8,000 for one qualifying person, or $16,000 for 2 or more. However, for 2022, those caps have returned to $3,000 and $6,000. So, sorry, it's gone. The child tax credit offered up to $3,600 per child under age 6, and up to $3,000 for ages 6 through 17. Again, that's gone. It's maximum $2,000. As you know, there are no stimulus monies, but it's going to be interesting to see if some people receive their stimulus monies now, if we're going to have to go back and amend. I would imagine we would have to, because it would change what was done. So if you're barely receiving your stimulus payments now, actually, I probably should have thought that one through before I said that, because it would be for that year. Because either you did or you didn't get it. And even if the IRS says you claimed it, you prove that you didn't, it's still reported by the IRS on that year. So, yeah, you probably won't have to change anything. So, if you get a letter for clarity about not receiving the stimulus or receiving the stimulus late, speak to your tax preparer, and they'll be able to assist you on that. So, probably shouldn't even have mentioned that one, but that's okay. I don't know if there are any questions in the chat room right now. I'm really pretty much done with the tax law changes. In February and in March, I'm going to be talking about the tax season that moves forward and some of the changes already for the 2023 tax year. So basically a year from now that you're going to be filing. Yeah, I think that's it. Oh, I did forget the alternative minimum tax one. I'm sorry. The AMT exemption amount is increased to $75,900 or $118,100 if married filing jointly or qualifying surviving spouse. $59,050 if married filing separate, which is half of the married filing joint. The income levels at which the AMT exemption begins to phase out have increased to $539,900 or $1,079,900 if married filing joint or qualifying surviving spouse. So that's really going to be it. I wanted to give you a shout out. Remember, if you are in one of the California disaster counties, I believe it's 30 of the 58 counties, your tax deadline has been extended to May 15th. Otherwise, for the rest of the world, remember, it will be Tuesday, May 18th, because in Washington, D.C., there is a holiday, Patriots Day, on the 16th, Sunday, which carries over to the 17th, Monday. IRS is closed on Monday, hence the 18th. So don't be shy. Set up an appointment. Other than that, looking forward to a wonderful season and looking forward to being able to help everyone. Your thoughts are appreciated. And if there's something that you feel that you need or would like me to go over in the future, drop us a line. Let us know. Leave us a comment here, and we will get to it. Today is the 22nd, which is the fourth Sunday of the month. I'm looking to keep that schedule, except in April. That won't happen. It'll probably be in the early part of the month. But it will most likely be, I don't know, it depends on the holidays and stuff. But yeah, it'll be more likely the fourth Sunday moving forward, but nothing in April. So once again, my name is Rogelio Noriega. Thank you for joining me. If you have any questions, need assistance, Jedi.Tax. And to other firms, if you're interested in joining me to talk about a topic, come and join us. That way we can get your firm out there as well. Hey, if you have an expertise, you want to talk about it, come on over. Hey, it'll be great. It'll be a lot of fun. So for everyone else, we'll see you guys on the other side. Peace. Let me know if you guys like the intro music or not. But I'm going to go out with the NDB Media theme. If I can get it to go. And no, it did not. Now it should go.